0.6% in the red, a bit of negativity, and again, really at the mercy of what we see coming through. Headlines coming from Europe once again.
Yes, definitely. I think markets have certainly had a very good rally year to date, and I would probably go so far to say it probably has been a lot better than what most market say participants would have expected, and I think there's going to be a fair amount of volatility until around about April, until we have a lot more certainty around this Greek bailout package. I think there is still a big risk that Greece might actually default, and until then I think it's going to be a relatively choppy ride. Asset prices has certainly rallied relatively strongly, so I'll be fairly cautious, I think, maybe for the next couple of weeks.
Well, I mean, just looking at, we've got the top 40 index behind us. We've got about quite a few stocks on the financial side, and the of course banks doing quite well. But Rhynhardt, the truth of the matter is we've also seen a few of those resource stocks doing quite well. The likes of Impala, Sasol, in positive territory today. No real direction coming through, but the point is a lot of these companies have actually been hitting interesting levels. How much longer can we actually expect this kind of rally to continue? Do you think it's going to be just one of those stock pickers markets?
Yeah, it's quite hard to say. If you look at the banks, we've had a couple of trading updates, and mostly they kind of seem in line, which I think the market liked. I think we went through quite a long period of banks actually disappointing on their trading updates, so I think it's just relatively good news that they seem to be kind of meeting analyst expectations. From a valuation point of view, I think they're starting probably to look relatively full, but perhaps not very overvalued. On the commodity front, in the fourth quarter of last year, after the major sell-off that we had in, say, August and September, there was certainly value, and then economic data started surprising on the upside, and share prices rallied. Going forward, I think it's going to be a lot more difficult. I would be quite surprised if we see a major rally further in like commodity prices in the short term. Very macro, say, data dependent. I think there's certain areas where there might be value, and hence it will always be a stock pickers market. But I think the market has actually run relatively hard, and to eke out substantial further gains from current levels will be actually relatively difficult.
So let's touch on ArcelorMittal, which is down around 2%, Rhynhardt. We saw company once again coming out with a loss. Interesting to note, though, that full year revenue was up around 4%. The company says that they're going to have a better first quarter. Are you convinced?
Look, I think they will definitely have a better first quarter, given that the fourth quarter was not a great quarter, and neither was the third quarter. I think if you look at the results, it's perhaps slightly disappointing. I think that analysts were expecting well north of 70 cents in earnings, and they managed to make a loss of 13 cents. But having said that, their main Newcastle plant had major operational difficulties towards the end of the third quarter, and was basically out for most of the fourth quarter. So that will come back online in the first quarter of 2012. So volumes will certainly look a lot better when they do report first quarter earnings of 2012. The outlook for steel prices, I think, is a little bit more mixed. Steel prices have actually been trending lower, except for like in the US, so they will be receiving a lower steel price here in SA. From what I understand is that the prices that they charge local merchants, it's kind of well above global benchmark prices. So I don't think that they have the ability to actually increase steel prices further, but I do think that volumes will offset it. In the medium to longer term, I do think it's a company that faces serious issues. There seems to be a lot of operational and I think structural problems with most of their plants. There's not a lot of volume growth. I think the balance sheet is probably not as strong as what it used to be. So I'm not that hard on Mittal, but I do think that the next quarter will certainly be significantly better.
Just looking at some of the companies that have fared well today, Naspers is up 1.5%, Bidvest also gaining around 1.3%. So as we mentioned, that seems the banking sector was also doing relatively well today. But let's just touch on the industrial front. Given the fact that they've actually been pushing the JSE much stronger, are you expecting a bit of a pullback because the sector overall is looking slightly expensive relative to the other sectors?
Yeah, it's hard to say. I think if you look at last year, I think quite a few industrial shares did actually do very, very well. Shares like SAB, British American Tobacco, most of the retail shares, and year to date, I think that they've been relatively soft, broadly speaking. I think in the coming year, I think that finally perhaps the retailers will actually start struggling. PE multiples remain very, very high, and I think most of the good news are certainly in those share prices. I think for the likes of like the global multinationals like a BAT, it certainly won't have the same great year like 2011, but I don't think it's going to be a particularly bad year. Where there is perhaps value, I would probably say maybe MTN. It has taken a fair, I would say, beating in like the last couple of weeks or so. I think that I do think that the valuation looks relatively interesting, although the news flow certainly does count against the company in like the short term. But on a medium to longer term basis, I certainly think it does look interesting.
Absolutely. I mean, it's sitting at 132 Rand, and then you juxtapose that against what you see on Vodacom, and it's sitting at 101 Rand 40 cents. So Vodacom trading above that key 100 level. Do you think that many investors are now looking at Vodacom as a key investment scenario, or do you think that MTN will once again be in favor?
Look, I think where it's currently, I would say that if you were in Vodacom, I would think you probably would be looking at maybe switching to the likes of like an MTN. News flow for Vodacom has been much better. I think investors are relatively excited that they might lower their dividend cover yet again. I think they pay roughly about 80% of earnings out as a dividend, and that might go to maybe even well north of like 90%. So I think that is probably what has sparked the recent rally in the share price. For MTN, I think that the long-term fundamentals of that company remains intact. Yes, there's been relatively bad news coming out of that has been coming out of Nigeria. But I think that will clear up, and I think when the company reports their next set of numbers in March, I think some of those fears will be like alleviated, and around about the 130 level would have proven to be a fairly good entry point.
Rhynhardt, let's also touch on the banking space. We had Nedbank out with a trading update, expectations of headline earnings per share hitting as much as 28%. Absa not too long ago talking of headline earnings per share up as much as 20%, and then we had Able also coming through with impressive numbers, saying that we could actually see this performance occurring throughout the year. Are we looking at the banking sector actually being one of the best performing sectors throughout the year?
Look, I think on a relative basis, and I would say certainly relative to the other like domestic plays. Let's just use the retailers as an example. I would say definitely yes. On a multiple basis, they do appear much cheaper. On a dividend yield basis, it looks kind of reasonable, ranging from 3.5% to 5.5%. As they've kind of reported from an earnings growth point of view, I still think that they kind of like have the tailwinds of lower like impairments going into like 2012. It seems like the negative endowment effect of lower interest rates is kind of is kind of rolling out. And if you look at the likes of Able, their like business book does continue to actually grow. I think that the like dividend yield is very, very healthy. It used to be trading at a high premium relative to the big four banks. Now it's kind of on like par, maybe even a marginal discount. So I do think that African Bank would probably be my like pick among the bunch. And then the rest looks, I think, relatively full, but I don't think they are going to have a bad year, not at all.